Yeah, thank you very much. It's my pleasure. When I was thinking about what I was going to speak about today, I thought, what are some of the hot topics that are happening right now in the market? So, in the last 2 weeks, we've personally restructured and modified over 200 million in loans. On average, we'll structure somewhere in behalf of like $4 billion for sponsors, operators, syndicators, people just like you in the multifamily space, qualified non-debt recourse space, self-storage, mobile home parks. It doesn't really matter, right? So I apologize if I move through the material quickly. At the end of it, you can always hit me up with an email and we'll send you our slide deck for free, right? Those of you that are investing, you're hoping that the people that take your investment are treating that as a steward, that they're stewards of your wealth, right? And you as a sponsor, operator, syndicator, you're having to carefully and responsibly manage other people's money as it's entrusted to you. So in this volatile capital markets, what do we do when this concept of stewardship is really tense, right? The fact is that we've had historic interest rate raises from March of 2022, 12 times, right? Explosion of interest costs in some sub-markets or markets around the country. There's really virtually no competition for insurance. Utilities are up, maturing rate caps on floating rate debt that is maturing. It's $659 billion in 2024 and $728 billion is maturing on those rate caps in 2023. All that leads to significant pressure. And the regulators are not opposed. They know this is coming because they pushed out guidance in July of 2023. The Federal Reserve Bank actually and the National Credit Union and other regulators pushed out guidance to your lender. And they said that you need to work prudently and constructively with creditworthy borrowers to restructure or modify existing loans. But if you currently have a deal and you haven't been talking to your servicer or your lender about how it might be restructured, well, then this is the talk for you, because it's crazy. The fact is the Fed has told lenders to pretend loans are performing, and we won't punish you if those loans on your books presently are not performing, provided that you restructure and modify those loans. So the reality is a lot of us are swimming around in this giant volatile sea right now, and we're trying to figure out which way is up and how to do this. So the question really to you is it time for you to get aggressive, super aggressive on either entering into conversations with restructuring or modifying your loan? Is it time for you to get really aggressive about pursuing potential distressed sale? Is it time for you to do something else so that you don't lose all of your investors' money? And I love this quote from Winston Churchill. He says, however beautiful the strategy is, you should occasionally look at the results, right? So your business plan when you went into the deal was one thing. That business plan has been torn up largely, thrown into the trash can, and now you are expected to be able to pivot. Can you pivot effectively to actually restructure your loan? So areas of potential modification that we're going to touch on very briefly. These are areas of negotiation that occur with lenders, with both bridge lenders, hard money lenders, preferred equity lenders, mezzanine or junior lenders. The rate, the interest rate, right? That's probably the biggest stressful aspect of it. The rate cap, what to do about these maturing rate caps that I can't theoretically afford to buy a replacement rate cap. What about reserves, interest reserves, tax reserves, property reserves, CapEx reserves? All of these things lead to further pressure inside of your existing deal. What's this DSCR thing that the lenders are always talking about? It's your debt service coverage ratio. It's how the lenders evaluate the stability of your current loan inside their portfolio. And then many of you, your loans, because you got them on bridge loans, they're maturing. And there's a maturity date and an exit fee and other fees associated with that. So those are the things that you have to remember. Results matter for your investors. Results matter for you. You got into this business to build financially legacy building wealth for other people. You got to be ready to be able to pivot. So here's the process that you're going to expect to go through a lender if you're going to do this. One is a pre-negotiation agreement with the lender. That's usually step one. They're going to ask you to sign that. hardship timeline. They want to know, what is your plan? Why did you get into this situation? Why do you believe you got into this situation? What is your plan going forward? Step 3, the lender's going to dig into your plan. They might even do additional thirds on your property and look at your financials and really do a deep dive into that. Step 4, you're always going to be negotiating during this time frame with your lender. And step 5, papering the modification or restructuring. Those are the standard 5 steps. I don't care if you own a skyscraper or a donut shop. These are the 5 things that you're going to be renegotiating and talking about with your lender, and that's the process. So let's take just a quick little deeper dive into each of these steps. Pre-negotiation agreement. Expect this to be in writing. Expect them to want you to sign this before they'll even talk to you about modifying or restructure your loan. Lenders started doing this after 2008. We weren't doing this in the late 90s, in the early 2000s, and then 2008. But lenders got savvy to the fact that borrowers on loans that were in non-monetary or monetary default wanted to use conversations that they were having with the lender about potential modifications as a hook inside of litigation. And so these are largely confidential. They want all the conversations to be confidential. There's no waiver of the lender's rights. In fact, you're going to be they're going to be asking you to release the lender. That means that if you had any claims or causes of action against your lender, you're going to waive that. And in most cases, you need to be obviously seeking legal help to walk you through those scenarios. But in most cases, you don't really have a viable claim against your lender. So don't get caught up on stopping the process and then walking yourself into a foreclosure if you can't get out of the starting gate. So step 1, that pre-negotiation agreement. Step 2, you got to lay out your plans and your risks to the lender. What's the type of loan that you have? What's your interest rate? The use of the rate cap, the use of the reserves. You're obviously going to want waiver of any current violations or defaults, maturity and amortizations. If you don't account for these things inside of your plan and your asks, there is going to be a tail claim potentially that your lender could bring against you or your KPs or your guarantors in connection with your loan. You don't want to have your lender come back after you if this modification actually gets put into place. What is the lender going to be doing during this exact same time frame? Well, they're going to be getting updated thirds, a phase 1 environmental report, a property condition report, and appraisal. They're going to be looking at that DSCR analysis. They're going to be looking at your NOI analysis. They're going to be asking for additional docs from you, maybe even from your guarantors. And they're going to be running searches, litigation and updated lien searches at your property. What's the next step? Well, step 4, you're going to be negotiating with your lender, right? You're going to be getting essentially current BOVs, understanding the comps, understand the lender's capital structure, understand market factors and pricing. You need to be firm on some things, but you also have to understand the lender's doing you a favor. So you're not going to be able to get everything that you want. You really have to focus in on what the major points are. And when that negotiation starts, you really have to give guidance to your legal counsel that's actually participating in those negotiations, or you with the servicer on the phone calls to try to figure out exactly what your endpoint is. And remember, you're going to have to give a little, they're going to give a little, right? Remember, the Fed is instructing the lenders back in June and July of 2023, you need to work constructively with your borrowers. So it's work, right? Work constructively. So sometimes don't be afraid if these things will linger out a couple weeks, maybe even longer, while you're restructuring and discussing this. Step 5, what are you going to be expected to see? What's going to happen at the end of this negotiation or this pre-negotiation, this process that you've entered into? You're going to have a modification document. It's going to be very similar to a loan document. It's going to set forth how the loan terms and the documents are being changed. There's going to be a reaffirmation of the existing guarantee or that's already in place. Remember, these are largely non-qualified recourse debt, which means that there's limited carve-outs, those bad boy, bad girl carve-outs associated with that. You're going to be asked to reaffirm the property status, that you're not in breach, those things. Remember, this modification is waiving the prior breaches that have occurred. The DSCR blown, maybe the maturing rate cap that you were not able to do, maybe even the maturity date on your loan if you're so lucky, potential other changes. And just here's the thing, your KPs, your guarantors, those people, the sponsorship group, they got to be around. They got to be able to sign stuff. They can't be off, flying here, flying there, being out of the country. So this is it's a very tightly compressed time frame that you actually have to get in there and talk to your lenders about that stuff. And more importantly, not the least of which, you need to keep your investors informed, especially if modification talks break down and you want to avoid foreclosure. Then the likely thing is you're pivoting to sell the property in a distressed sale, in which case some or all of the equity that you brought to the table through your investors may be gone, unless you're able to structure something like a hope note or a profit participation agreement on the back end with the incoming buyer. Those are super important for you to keep your investors informed. They've got to be available. You got to be available for the obstacles, oppositions, and challenges that are associated in this process, because everything has a little bit of hair on it, right? You're not the only one that is in distress. There are other sponsors, operators, syndicators from around the country that are inundating lenders right now with modification requests. There are foreclosures happening, but it's not like 2008. It's not a wave and a sea upon sea. But with the dollar being up, the CPI being up, inflation still over 3, not dropping, the Fed is not going to lower rates to accommodate that floating rate philosophy that you have in your business plan. It's going to be too little, too late if you don't grasp these concepts right now to be able to aggressively negotiate with your lenders or aggressively court buyers who might be able to be in position to step in and do a soft assumption into your current loan, resize that, because all of your lenders in these modifications are going to request additional new capital. That's key, additional new capital. And for many of you, your networks are tired. Your retail investors are tired. They've already written off the investment in large part. Or if you hit them with this information, and this is the first time that they've heard that your loan is in distress, they're going to be pissed, very, very angry and upset with the fact. So you need to be planning for your messaging, how you deal with your investors, how to deal with your lender, how to modify, how you're courting potential buyers to come into the process, all to avoid foreclosure and the total loss of equity. So it's super, super important. And remember, we always have to be available during this process. So that means that for many of you that have W-2 jobs, you're not professional investors. If you're one of the lead sponsors of the GPs on the team, you got to be available, ready to implement and you got to be ready to have those hard conversations with your investors. You got to be able to have the hard conversations with your lender or your servicer. You got to be able to have those hard conversations with some of the AP vendors that might not be getting paid on a distressed debt sale. So what's the biggest obstacle? It's obviously fear, right? You have fear about what am I going to look like to my investors? How am I going to be able to do another deal if I get foreclosed on? How am I going to deal with the vendors that have participated if they're not able to get paid? How am I going to come up with the new capital? All of that is very stressful, very, very challenging in this environment. But I want to fear just leads to procrastination, right? Fear just leads to ambivalence. It leads to the inability to act. You need to push through that fear. You need to be a good steward of the opportunity that you have. You didn't get this deal by mistake. You're in a tight spot. You're not the only one that's in a tight spot. You have the ability to pivot, but you have to pivot quickly. You have to be aggressive. You need to get your team immediately into play, right? Here's one of the sayings that I see almost every day. Everyone wants to eat, but few are willing to hunt. That means that people will largely be passive on these decisions, these super decisions. You cannot be passive on it. You have to be really aggressive, especially here in this challenging capital markets. We are not internally, our opinion, we are not forecasting this sea of wave of kind of volatility to end until late 2025, maybe even as late as 2026. So in that time frame, there's going to be hundreds of billions of dollars of properties that are traded in this market. There's going to be tons and tons of sponsors that avoid foreclosure and total loss of investor equity. Are you prepared to be one of those people? This is the challenge that's before you. This is the challenging thing. Here's my contact information. If any of you would like this slide deck, or you are a sponsor presently, operator, syndicator, you're looking for some sort of lifeline, somebody to listen to what happened in your deal, or potentially help you navigate these choppy waters and the strong headwinds that we have in connection with the volatile capital market, please reach out to us. We're always willing to chat with you about anything. God bless you. Happy hunting.